Hello and welcome to the Cryptocurrency News channel. I want to talk about something a little bit dire that I've already talked about on my streams, and is that did FTX, Alameda Research, and SBF actually liquidate their own users? Yes, so we know that Bitcoin rose because of over $1 billion of shorts liquidations over the last 2 days. We also happen to know that about 800 million of that 1 billion, roughly 80% of those liquidations occurred on FTX. So that inclines me to think that it was FTX, Alameda Research, and SBF that actually played against their users. Now, it could have been any other big party with backing, but because they're the ones that actually own the exchange, I feel like it's more likely to be them. And like SBF has been accused of other things as well that's kind of like this. Now, I don't know if this is actually illegal or not. He might just be taking advantage of a weakness in the market. And he's kind of a robber baron, but he does it legally, so there's really not much you can do about it. And even if it is illegal, it's hard to prove because crypto is roughly unregulated. Until you get more regulations, you really can't stop these things. So the thing is, this is how it works. There's a bunch of big shorts piled up on FTX because it is one of the big exchanges, one of the big exchanges out there, at least like outside the US. So they see a bunch of like shorts piled up. And the liquidity for Bitcoin right now is still pretty low, being in a bear market, meaning it doesn't take much money to actually pull Bitcoin down to liquidate some of those shorts. I bet some of those shorts were around $19,000 or $19,500. What that means is they didn't have to pump Bitcoin too much up in price because those shorts were probably highly leveraged, which means if the market moves 1% bullish or 2% bullish, like they would actually be able to liquidate a lot of those shorts and drive the price up. So seeing that opportunity, what Alameda, SBF, or any other big party could have actually done is take a long position first and then use their substantial income, well, their substantial money to actually buy up Bitcoin. Now, their substantial money, with their substantial money, this is generally a tactic called slamming the door, and I do believe it is illegal in the traditional markets. You take a long or a short, and then you either buy or sell the asset with your substantial amount of money. So, for instance, FTX Alameda Research has hundreds of millions or billions of dollars they're backing. They take a long, they spend however hundreds of millions on FTX to actually buy up Bitcoin. Along the way, after however much money is spent, Bitcoin rises 2%, and then those shorts that they looked at that were stacked up start liquidating. Now, since they actually own FTX, they know exactly when those shorts will actually liquidate. And the thing is, like when you leverage, you can actually get margin called, and when the price goes the other way, you have to increase your collateral by some minimum amount. Now, most people who do high leverage aren't really that rich, so they don't have the money to actually increase their collateral. So as an effect, they get liquidated, and when they get liquidated, the price of the said coin moves up because the bets against it are basically being destroyed. So the thing is, like, an FTX probably also makes money by liquidating them as well. And plus, like, on top of that, their long is actually getting filled as Bitcoin rises. So FTX might actually make money from liquidating the shorts as well as filling their own long. And plus, like, they're actually buying Bitcoin. And because of the cascading effect, Bitcoin is going up, so they're making money on buying Bitcoin as well. Now, the danger of this is that once they accumulate a lot of Bitcoin and it pumps up, they can actually sell off and make profits. So if you're taking longs right now, it might be a really bad idea because they could just, FTX or Alameda or whichever entity has made a lot of money buying some Bitcoins could sell back down again. And I'm betting that's what they will do in the next couple of weeks. I do not think this is an organic pump at all. So the question is, was this FTX, Alameda, and SBF is doing? I think there's a good chance because they're the ones who would actually have the insider information on FTX. There is no way to actually prove it for me, but based on like what people are speculating at, and based on the fact that 80% of these shorts were actually liquidated at FTX, I'm very much suspecting it's actually them. So they're kind of doing a robber barons type of play. And if you're wondering how it works, that tactic called slamming the door is actually how it works. In this case, they basically bet long against their users' shorts, but it can also be the other way around. Like you bet short against your users' longs and then you sell off, which might actually be their plan in the next couple of weeks if a lot of longs come up. So be very, very wary of that. And this is also another reason that normal people like you and me should not play leverage, because the exchanges can always play leverage against you. So let me know what you think, like and subscribe, hit that bell notifications button. Thank you and have a nice day.